All right, welcome in, ladies and gentlemen. Trim Capital here. Just want to come to you for a quick video tonight. It's February 3rd, 2025, after this last Sunday and Monday liquidation event. And I'm going to show you a couple things that personally I find disgusting with the way some of these markets work. And, whether it's market makers hunting for leverage or whatever it may be, it's pretty gross. I'm going to show you some examples here on why you should never use leverage. And if you do, certainly understand the risk, considering over, probably billions of dollars just got liquidated. But I'm going to show you a couple charts here, and then I'm going to show you the source that we get a lot of data from, where you can kind of use it to identify these leverage levels and a potential bottom on some of these assets as they trade. Pretty important, especially while we're in a bull run. Like I said, they just liquidated a bunch of retail, and I guess the first example I'll show you is from our LinkedIn page that we shared actually today. And I shared it from this Mike Trading. Of course, I've seen this chart on other channels as well. But right here in the middle, this is the Bitcoin retail and large investor holdings. And this purplish line that you see is your retail. And clearly you can see, and this is Bitcoin, so you can see that retail is selling and or getting wiped out. But at the same time, what else do you notice on here? And that is that red line, which is your large investors, nothing but up. And like we like to say, don't be in the 99%, do what the 1% do, which means don't do what retail does. So again, if you're using leverage, you most likely just got wiped out. And we're going to show you a couple of charts here, but it's very dangerous. It's a way you can lose everything while the big boys in the 1% maintain their wealth and build wealth. So just keep that in mind. And here's an example. This is actually one of those liquidation heat maps that I'm going to show you here in just a minute. But this is Chainlink, but we got XRP, we got Chainlink, we got Cardano. They all look the same. So we're going to pull that up over here. And actually, I'm going to show you the chart first. I actually tell you what, I'll show you the liquidation heat maps first. So this is from coinank.com. Then let me refresh this, and we're going to look at the 1 month liquidation heat maps here. And if you change the frequency or whatever, it does change the view. But you can see here we are trading on 2-1 for Chainlink up around that 25 mark, 25.69. And in one day, this thing dropped down to $15, 15.56. And you can see all these green bars here are your leveraged traders. So literally in a day, it dropped that much just below these leveraged traders, and it wiped them out. And look, immediately, boom, right back. It's kind of gross, to be honest. To me, it should be illegal. But and you can see all the millions of dollars at these different levels. I mean, 2.41 million, 2 million, 684,000, 1.32 million. I mean, we're talking millions and millions of dollars. So that's LinkedIn. So we can also look at Bitcoin on here. And then we'll go look at the charts as well so you can see what it looks like on with the real data. But again, you can see Bitcoin was around that 104 mark back on January 31st, just 3 days ago. So it went from 104 down to basically 91,000. So you can see a bunch of leverage in here and right back up to 100,000. Pretty nasty. And they all look the same. So all the altcoins. So we're going to pull up a XRP's chart, and I just want to show you the daily view and the 4-hour view. Because the more and more we look at these things, we're beginning to think we might want to switch to a 4-hour trading chart, especially as we get later in the bull run. But here you can see, here's that scam wick is what we call it, but a scam wick down where it dropped from over $3 down to $1.83 in one day, and bam, right back above that 50-day moving average. And all those individuals using leverage just got wiped out. So it's unfortunate for those. It's very sad. And the big boys cleaned house. And I'm not saying it won't go lower, but you can see that is a big drop for one day. Unbelievable. And again, if you look, actually, let's go back to look at the, we're going to look at the 4 hour. It's even worse. Look at this. And again, what's beautiful about our system of indicators is this right here. When you're in blue, that's kind of your normalized range. Gray is beginning to look like an opportunity. Light green is probably an area we typically dollar cost average, and dark green is where we go all in, typically, for our portfolio and our strategies. Not saying it's good for you, hence not financial advice. But you can see here on this XRP 4 hour chart, this is back on February 2nd on Sunday. Dropped all the way down to 182 again, wiped them all out, and bam, right back to the 200-day moving average. Looks like we might test it and go back toward that 50-day. We'll see what happens next. But you can see again, not only did we print a dark green on our price action indicator here, but we got the green dot a little bit later. But again, it's so gross. But if you were using this, obviously you could have gotten out back in this zone over here. Right? This would have been around the 316 mark. Pretty damn good. And you would have gotten back in somewhere in this, I'll just call it 228 or 240 to $1.85. So very, very, very nice. Works very well for us. And we'll look at another one. Let's look at Cardano. Oh, man. Yes, we do have a lot of Cardano. No, we did not sell. We do not panic sell. And we can say that because we know what we hold. This is the future, in our opinion. So if you understand what you hold, understand the space. This isn't that uncommon, to be honest. But this one moved from $90, basically, down to 56 cents. And again, we nailed it with our indicators, just like we did before. Same thing. You could have gotten out on Cardano over here when it approached the red. That would have been around $1.10. And the next time you saw dark green, we're down here at 55 cents. So that is a great way to build a bag. That's all I'm going to say. And again, there's not really any real reason to go through a bunch of these. I'll show you that Chainlink chart. We just looked at it. Again, now granted, Chainlink, we probably would have got in a little early. But we did catch it on the way down. It depends on how much dark green we get. Now, we did get a lot here. That was a huge candle. But again, it was in the dark green zone. And at the end of the day, anytime that we're buying in this dark green zone over time, we're going to be doing well. So whether you got in at 1986 or 1632, really doesn't matter where it's going in the long run. So anyway, that was just a quick message to tell everyone to be careful. Always do your research, know what you hold. Don't panic sell, when things aren't going your way. Understand liquidation levels, because a lot of times that's what's driving these crazy moves. When you see this, they're knocking out the retail investors with leverage. So keep that in mind. Again, that's coinank.com. If you want to take a look at that liquidation heat maps, you can again change those frequencies, whether you want 2 weeks, 1 week, months, whatever you want. So it's very, very good data. But with that, safe trading, and we'll see you in the next one. Thank you.